Exchange-traded funds cross $1 trillion of inflows in 2024, extending record year. Nasdaq 100 surges 1.9%, setting a new all-time high. Apple unveils ChatGPT integration for Siri. Plus, oil steady as weak demand offsets supply constraints from sanctions. You're welcome to Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. It's now time to talk business, and we'll start with a cheering news for those who love to do research using smartphones. Apple has released software updates for iPhone, iPad, and Mac, introducing ChatGPT integration with Siri. When Siri encounters complex questions, it can access OpenAI's GPT-40 model with user permission, ensuring privacy by not storing requests. Users don't need an OpenAI account to use the feature, but can pay for upgraded ChatGPT versions through Apple. This integration, a part of Apple's AI suite, is a key element of iPhone marketing strategy following its announcement in June. Now, the European Central Bank is poised to implement its final interest rate cut of the year on Thursday, likely opting for a 25 basis point reduction rather than a larger than half-point adjustment. Economists anticipate a quicker pace of monetary easing in the near future. This meeting will be pivotal in shaping ECB's guidance for the coming year, as it coincides with the release of updated quarterly macroeconomic projections on growth and inflation. These forecasts will account for the uncertain global implications of Donald Trump's return to the White House and its proposed sweeping trade tariffs. So far this year, the ECB has reduced its key interest rate from 4% to 3.25% through 325 basis point cuts between June and October. The National Bureau of Statistics says the National Health Survey 2023 report can serve as a veritable tool for policymakers to address infant mortality rates in the country, which stands at about 65% per 1,000 live births, and shortage of essential medicine at 35%. Statistician General of the Federation, Prince Adeyemi Adeniran, said this at the launch of the National Health Facilities Survey 2023 report in Abuja. The survey, conducted nationwide, assesses more than 30,000 health facilities. It highlights critical areas such as availability of maternal and child health care, diagnostic services, and access to essential medicines. Findings reveal both progress and significant areas for improvement.
For policymakers, vital resource for health administrators and other stakeholders, offering evidence-based recommendations for informed decision-making. By utilizing this information, we can implement targeted interventions to address the most urgent issues in healthcare delivery, particularly at the primary healthcare level.
The report of this survey challenges us as policymakers, as health workers, as leaders, elites in Nigeria. I believe that, yes, I commend the presenters on the highlights of the report, but I've also gone through it. I had a snapshot of it, and I must say that I feel challenged, and in some instances, a little bit depressed that we're still at this level at this point in time.
Now, Nigeria recorded a trade surplus of 5.81 trillion in quarter 3 2024, as reported by the National Bureau of Statistics (NBS). Total merchandise traded at 35.13 trillion, a 13.3% increase from quarter 2 2024 and 81.4% higher than quarter 3 2023. Exports grew to 20.49 trillion, making up 58.3% of total trade, driven by a 65.4% contribution from crude oil exports, that is talking about 13.41 trillion. Non-crude exports, including agricultural and manufactured goods, totaled 7.8 trillion, but represented only 12.2% of total exports. Imports increased to 14.67 trillion, accounting for 41.7% of total trade, with motor spirit, gas, oil, and used vehicles being significant components. Key trading partners for exports included Spain, the United States of America, India, while China and India led import sources. The trade surplus was boosted by currency devaluation, which increased export values while raising import costs. While crude oil remains dominant, higher prices for agricultural exports like cocoa and rubber highlight opportunities for Nigeria to invest in agriculture and diversify its export base for greater economic resilience. Well, with this background, I have joining us via telephone from Port Harcourt to talk about this merchandise trade in quarter 3 2024, the CEO, Institute of Export Operations and Management of Nigeria, Ofon Odofia. You're welcome to Business Express.
Thank you, Musa. Good to have you once again.
Well, this is Benny, not Musa. We're trying to connect with you through WhatsApp, but we couldn't. You could have seen me. But it's good that you're hearing my voice at this time. And I'm sure you must have had those numbers, and not just been reeled out this morning, but these are numbers you're familiar with, being someone who is a key active player in the trade ecosystem, majorly exports. The NBS report shows a trade surplus of 5.81 trillion naira for quarter 3 2024. What does this signify for Nigeria's economic growth?
To an extent, yes, the trade has increased compared to last year. But what we need to look at is what aspects of the export trade or generally trade. So it means that we are still having the surplus as a result of crude oil. And the mantra of the current administration is a non-oil sector. It's a good thing, but it will be most better if much is done from the angle of the non-oil sector. It's a good development and it's good for the government, but more attention should be paid to the non-oil export sector.
Okay, good. Haven't made that point. Yes, it is agreed that oil is still the key driver of Nigeria's economy, as reflected in all the growth indices that we have seen over time. Yes, there has also been efforts to grow the non-oil segment. But if you look at the last GDP figures, the key drivers of growth for that GDP growth is the services sector and not agri-commodities. What is that thing that is needed to ensure that we have these agri-commodities come tops in terms of active participation in growing our economy?
Yes, the agri sector have been having challenges over the years, and even as of now, apart from infrastructure and putting other things in place, yes, it's one thing to farm, it's another thing is to be able to export. So most of the issues is that the policy around our agencies that will aid export is also having a challenge, like the policies within the port environment, digitalization, and the rest. So even if we are able to produce for export, do we have the enabling environment? Is there an ease of doing business as it has to do with export? For instance, an exporter would prefer to do informal because one, the process of doing his NSP and all those other things, he sees as a waste of time and he sees it as something that is disturbing him. So that's why you see that if we actually capture our informal trade, we may even have more of these agricultural products exported. So it is one thing for us to produce more, another thing is to have the ease of being able to export these products. So the agri products need to be looked into so that this will help us to earn more foreign exchange through the agri system. So we need to look at the processes of exporting. The single window that the government is talking about, we need to really do something about this in order to help the economy.
Mr. Ufonudofia, if I got you right, are you saying agencies of government, those who are responsible to facilitate a trade, are the ones militating against this trade, that exporters like you will now prefer to do it informally? How is that? Why is that happening? Please be sure of your facts.
Our process of exporting, when I said I cannot actually point a finger on what that's why the federal government is trying to come up with what we call the single window. If you go to other places, like if you go to Rwanda, Uganda, they don't have a port, but they have a seamless export system that within 24 to 48 hours, both clearing and forwarding is done. Clearing for the incoming goods and forwarding for the outgoing. So our process should be streamlined so that it will be interesting, it will be inviting, it will be something that is incentivized for us to encourage export. Our process is too cumbersome. So that is what I mean in essence. Our process is cumbersome. We should look at it. I should be able to sit down in my house using my computer to do my processes, and that goes at least digitally. But now we are still doing face-to-face contact. There are a lot of bottlenecks within the line. The processes should be simplified.
Okay, the conversation around a single window for export has been ongoing. This started, I think, even before the last administration. It is a conversation that is continuing now. It's something that have been part of meetings in the Ministry of Industry, Trade and Investment. Would you tell me what is delaying this process? And why do you think the one-on-one, the face-to-face is still ongoing? Is it about ensuring that Nigerians meet these needs? We've had issues around Nigeria commodities, agri-commodities being rejected at the point of entry into the countries of export. A whole lot of losses have been recorded over the years, and government have come up with labs and processes to ensure checks before leaving country of origin. What are the issues and how can we tackle this?
Yes, one, the lab that government has come up with, before you start this, there should be a huge level of sensitization. Like in the institute where I work, we have gone our own way to put up a small lab so that when you bring your product, the first thing is that you must know your product. Most of the exporters, some of them do not know their product. One. Then two, the issue of single window has been on the front burner for a long time. And I want to appeal to government that besides setting the committees with people from the ministry and agencies, the practitioners should also be called, or a survey should be done to really know what the challenges is and how to correct that. So if you are planning in our absence, it will be difficult. By the time you bring, you start having issues. But if you carry all of us along and we are going with you, it makes things easier. So the single window is a perfect thing that will happen to us, but how do we do it and implement it? The issue of products rejects, it is not only about quality. There are a lot in the value chain. Government need to do more because even packaging can lead to the rejection of your product. So the agencies need to do more. Training is key because you will not do what you don't know. So it is important that even the farmers should be made to understand that what they are planting is for export. What does that country need? How do they want it? There are a lot of policies, even like the EUDR, that has to do with deforestation. How many of our people are aware of this? And the next 1 year is coming to play. So there's a lot of work. I know that Export Promotion Council, the Ministry of Trade have tried, but we need to do more. Their trade promotion officers need to leave their offices and go to the interland, go to the local government and work with the State Ministry of Industries and Commerce.
Okay, Mr. Udofia, as much as I agree with you of the need for more enlightenment to ensure that what is needed is done to tackle all of these hiccups in country before going out. Let's talk about for those who have been able to succeed in getting their export products out of this country to those other countries of destination. We mentioned here countries that Nigeria love to export their products. Do we still have issues of product, commodity reject Has it been minimized? What do you think, in your own words, more like an advice, what NEPC can do to better some of this? More so that the NEPC has established trade houses around the globe, talking about China, we have one in Africa, we have one in Cote d'Ivoire, then another in the UK.
Yes, for people that are already exporting. And I'm also happy that NEPC has started a certification program. Because no matter how beautiful or how good your product, for instance, is in Nigeria, you have water, you don't have NAFDAC number. To a layman, that product is not good. So in as much as others are exporting, we also need to prepare them for certifications. There are a lot of certification process, both voluntary and mandatory certifications. So I think that would really help, that if in each year we earmark some exporters and said, okay, we want to do certification in this. And let me bring this to your notice. Sesame seed is a product that had the highest level of rejection in Europe from Nigeria. The highest rejection level is on sesame seed. So we can pick such product and say, what do we do? What are the challenges? Why are they being rejected? Is it from the farm gate? Is it from post-service handling? And then solve that problem.
Thank you very much, Ufon Udufia, for those insights. I'm sure those responsible to ensuring this happens are actually watching, and they are also listening. This is also a conversation that is ongoing, and we'll get to continue to ensure that the right things are done. Now, gold edged lower on Thursday as investors took profits after earlier reaching a one-month high, driven by rising expectations of Federal Reserve interest rate cut next week. Let's take a trip to the commodities market. Now, oil prices remain stable in early Asian trading on Thursday as predictions of weak demand and a larger than expected increase in U.S. gasoline and distillate inventories offset gains from new European Union sanctions targeting Russian oil flows. Brent crude futures dipped by 5 cents to $73.47 per barrel, while the U.S. West Texas Intermediate crude fell 11 cents to $70.18. Both benchmarks had gained more than $1 on Wednesday. Now, the exchange-traded fund industry has reached a historic milestone in surpassing $1 trillion in total inflows for the first time, according to ATFGI and the investment company Institute. Leading the surge is the Vanguard SP 500 ETP, which has attracted around $100 billion this year, as reported by FactSet and Asia's Bitcoin Trust, launched January. Is the fastest growing new fund with more than $34 billion in inflows. This rapid growth highlights U.S. investors' confidence in financial markets and declining appeal of mutual funds, which have experienced more than $200 million in outflows this year, according to a November 30 report from State Street Global Advisors. In response, some mutual fund managers are converting their offerings into ETFs. The previous record for U.S. ETF inflows was approximately $920 billion in 2021, and ETFs now manage more than $10 trillion in assets per ETFGI data. I'm back home talking about Nigerian markets. At the end of midweek trading, the exchange market was positive, building on gains recorded the previous day. This shows sustained investors' interest across sectors. Compared with the previous trading day, yesterday's data showed a 66% decline in volume, 49% decline in turnover, and 13% decline in deals. And on the aggregate, 130 listed equities participated in trading, ending with 34 gainers and 17 losers. Now, the Nasdaq 100 surged 1.9% to a new record, driven by the continued dominance of the Magnificent Seven stocks. Wall Street optimism about the tech industry's AI prospects remains strong, undeterred by a modest uptick in the U.S. inflation. The Consumer Price Index (CPI) rose 0.3% in November for the fourth consecutive month, with core CPI extending food and energy costs also increasing by 0.3%. Despite inflation's persistence, investor confidence remained high. On Wednesday, Skylar Whelan, and Chief Investment Officer at Reagan Capital, noted that the CPI report supports a 25 basis point rate cut at the Federal Reserve's December meeting, affirming progress on inflation while acknowledging its stubborn nature. Now, Asia-Pacific markets were mostly higher on Wednesday following gains on Wall Street that saw the Nasdaq Composite surge to record highs after November's inflation report met expectations. Let's see those numbers. While we await signals to join a live broadcast of the National Youth Conference in Maiduguri, we bring you a report earlier package where the federal government has identified 4 critical thematic areas as priorities for the development of national youth policy designed to empower young people, enhance their skills, and promote their active participation in society. This was at the 7th National Council on Youth Development. Nkaojo packaged that and gives us details at this time.
Oftentimes, Nigerian youths complain of their challenges.
Faced with unemployment, now the jobs are not there. The jobs are available and not sufficient because of population explosion.
We don't have support from the government first.
Youth inclusiveness in government. The idea of apathy, the idea of it doesn't concern me, shouldn't be there.
Now, it is time to address the challenges they face using key areas of governance, jobs, skills and innovation, culture, behavioral change, as well as human capital development.
And we are able to engage our youth in all these areas. You can be sure that we actually transform them for economic development.
The theme, transforming and repositioning the Nigerian youth to thrive and catalyze economic development, provides a comprehensive framework to empower and uplift the younger generation, as well as ensure that they have tools and support to thrive in the society.
In the area of youth entrepreneurship, in the area of youth scholarship, in the area of youth education.
Interventions moving forward must be cost effective. It must be able to meet the needs of young people. It must be done in such a way that young people are involved in the planning, in the implementation and evaluation.
Findings and reports on how best to meet the yearnings and aspirations of youths are expected to be presented to the Council on Thursday. From Maiduguri, the Borno State capital, Nkaojo.
While the race for appreciation between the Naira and the US dollar continues, let's bring you the numbers as traded yesterday. Well, we'll look to better trading for the Naira today, and we'll give you details. Now, this is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that our previous episodes are available on YouTube and other social media platforms. Business Express returns tomorrow at 3 p.m. Do keep a date with us as you keep thinking and doing business.